It's been a while since been at one of these physical conferences. I think exactly 2 years around this time in 2019. So really good to be here, guys. And yeah, I'll be presenting about the convergence of Web2 and Web3, a deeper look at DeFi, Fintech, and co-ecosystem milestones. So just a little bit of background about me. I've been in the space for about 7 years. I was the first employee at Wire. Wire is a fiat on and off ramp for dApps and DEXs in this space. And if you don't know what we do, we basically have a set of APIs that helps dApps and DEXs to on and off ramp between your bank account, your credit card, debit card, onto some sort of non-custodial wallet to access DeFi or NFTs or whatever, right? And then also being able to off ramp and pay out back to your bank account. So yeah, so I was there for about 7 years. Burnt out earlier this year. That's me on the left right there. Yeah, so just kind of, I think I was pretty obsessed with work. I saw my startup as a baby, and it wasn't mine. I was founding member there, first employee, but still, like I just burnt out. So yeah, for the past 6 months, I've been just kind of fluffing, right, and just chilling and realigning myself spiritually, mentally. Started micro farming, moved out to just somewhere very remote, and micro farming and living in the meat space instead of Metaverse. Yeah, and then ConsenSys reached out a few weeks ago, had a specific role that they were having a really hard time to fill. And it was kind of perfect for me because it was literally just talking to everybody here, right? Like just crypto native folks and for Metamask Institutional. If you don't know ConsenSys has been around for like 6 years. One of the founders of Ethereum is also the founder of ConsenSys, Joe Lubin. And over the years, they've found product market fit in Truffle and Infura, the dev tooling, node infrastructure. Also on the enterprise blockchain side of things, working with CBDCs and nations and bigger banks and tier 1 Web2 companies for white label ways of interacting with blockchains. And obviously MetaMask, right? So yeah, for the past few weeks, I've been working at Metamask Institutional, which is the ultimate DeFi bridge for institutions, right? Like there's different qualified custodians or third-party custodians where you're holding funds. And if you wanted to, go from cold storage to DeFi, that's a really hard process. If you want to learn more about MMI, feel free to find me here. I'll be working here somewhere after this. Yeah, so, just jumping right in. The great convergence of Fintech and DeFi. I did this little loop thing to close the loop so they kind of merge. I thought it was kind of clever. So when we see this on the news, right? Like literally, I feel like it's happening right now, right? You see it like, TikTok NFTs, right? Reddit has an NFT strategy. GameStop hired Matt from Loopring to head up their blockchain. And you literally see like Twitter allowing you to connect your non-custodial wallet where they'll read to see if there's any NFTs in that wallet and display it as your profile. Like this is happening right now, right? And then on the fintech or find and TradFi or payments or FX side of things, literally Visa is working with all of these crypto companies in order to like bridge between different networks, right? Traditional payment networks, blockchain networks. So and also with Stripe, hiring and creating a crypto team, they already had a crypto strategy since 2013. They had big bags from Stellar, but they just never actually launched anything until recently. And then obviously Facebook with Novi, right? And Revolut and PayPal and Venmo, and you see everyone that has some kind of crypto strategy from the fintech world. This right here on the bottom right is the KYC AML process for onboarding with Novi for their waitlist. They actually collected your full KYC just to be on the waitlist, and if you're qualified, then I was approved in like 2 days, so it's pretty cool. Yeah, so if we look at Novi and Revolut and PayPal though, right, and we think about how exactly they're integrated with crypto, we'll see that they are actually integrated with a company called Paxos. So what is Paxos? Well, Paxos is actually a trust charter in New York that has this kind of custodial crypto brokerage API that Novi and all these other companies are integrated with. So Paxos, PayPal, or Venmo, they're all using the same crypto brokerage API from Paxos, right? And then with Novi, they're instead of launching DM or whatever stablecoin that they were trying to do like 2 years ago, they're just using USDP, which is Pax USD, right? And using USDP, you're able to send money around the world for remittance and FX, right? They're only starting with US and Guatemala because a lot of Latin American countries have, one-to-one peg. So not that Guatemala does, but, US dollar is dominant in remittance, right? So, that's pretty cool. And if we dig a little bit more underneath the hood, what we see in Paxos APIs is, they allow you to create some kind of bank account, which is actually the user's bank account that you're off-ramping to, so like USDP back to USD, right? And you can also create some kind of crypto wallet address to send, so when you're on-ramp, where do you send the USDP to, right? And then you have to create some kind of profile for the user with their KYC, and then you can withdraw the crypto after they put it in their custodial wallets, right? You can also send it peer-to-peer along their network, meaning that it's a custodial wallet at Pax, but for user A and user B, and they can send it between each other. You notice there's no, just no JSON, RPC JSON calls. This is not actually, the user directly interacting with Ethereum. This is, a fintech platform is not making RPC JSON calls to Ethereum. They're making API calls to a centralized brokerage, right? There's a bit of a nuance there, but it's important. And even zooming out a bit more, Pax is, a trust, and they have this USDP or, stablecoin as a service. But, you have other companies that also do the same thing, right? Literally, like Circle. Circle has USDC. They also allow you to attach some kind of bank account, go through some kind of identity verification, and go from USD to USDC. And same thing with my previous employer at Wire, right? Wire doesn't issue stablecoins. They're pretty agnostic, where they literally just say, okay, there's a bunch of stablecoin issuers. There's also decentralized stablecoins on-chain. We're just going to add them all, right? Now you can go from USD to even something like PDI or RAI, like Polygon USDC. So, kind of bridging between networks once again. And another company called Prime Trust, which is also a trust based out of Nevada. Just by looking at the type of companies they support, you can understand that, for example, Binance US is powered by Prime Trust. So there's some kind of, once again, KYC AML, right? Onboarding from fiat to crypto, some kind of custodial account because they're a trust. And then, from there, it enters the blockchain. So what's the difference then between these companies if they all pretty much do the same thing? Well, they're regulated slightly differently, right? So, they're trusts, they're money transmitters, they're there's FinCEN, there's SEC, there's TFTC. So when we're talking about regulation nowadays, it comes in waves, once every 4 years, let's call it. Whenever there's a bull run, there's some kind of consumer protection going on that requires the government to step in to, crack down on our industry, right? So recurring theme, obviously. But anyways, for these companies, they all have to adhere to KYC AML policies, right? Whether it's FinCEN or whether it's SEC, they all pretty much have the same audits with their third-party auditor. Therefore, there's some kind of transaction monitoring, on-chain or off-chain, right? Chainalysis does on-chain stuff. There's other off-chain ways of doing transaction monitoring and currency transaction reports, right? Suspicious activity reports, all of these different things. And the users are always giving each platform the same KYC, as we all know, in order to get onboarded and on-ramp. I call this CeFi DeFi bridge because you're going from CeFi to DeFi, and there's a bridge. We usually think of bridges between blockchain protocols, but it's pretty much the same stuff in terms of networks, right? Like, because traditional payment networks are still networks, blockchain networks are networks as well. So when you're bridging between blockchain networks using Hop or something, it's not all that different in theme, right? From going from a bank to a blockchain. So on the left here, this is Wire's money transmission license from state to state. On the right is Circle's. So Circle and Wire are regulated as money transmitters from state to state. They're registered as a money services business at a federal level. And then Pax and Prime are regulated as state trust charters, right? And the charter itself extends to other states, so they don't actually have to get every state's money transmission license. All they have to do is get like one state's trust, and that extends to other states. And here's a little thing where Paxos says that they're actually better than MSBs in that they have more fiduciary responsibility to actually hold their stablecoin in cash, as opposed to other equivalents, right? So, not all stablecoins are created equally. On one hand, you have, Tether, obviously, that's not even necessarily based in the US or regulated here. On the other hand, I would argue probably Gemini USD or Pax USD are, from a regulation standpoint, the most sound, right? So for the maker team, think about that. Yeah, so we talked about trust and money transmission. What's going on in the regulation space right now? Obviously, the SEC is now stepping in and trying to overreach, and there is a world where stablecoins can be regulated by the SEC, right? Because all the interest-bearing accounts, right, and all the compounded interest that, or even the fact that the fiat is sitting in a bank and they're issuing some other token to represent that fiat in the bank, that looks like a security to the SEC, right? So, there's already some precedent there that was set in 2018 and 2016 with the DAO or Ether Delta, right, decentralized exchanges. Not trying to put it down around it, but just saying these things are real, and people at the regulatory level are talking about this. I actually think that in the mid-run and long run, this is a great thing, right? Like right now, in the short run, there's uncertainty. We don't know which way or the other. As soon as we know which way or the other, and you have regulatory certainty, then teams can deploy resources and go after those licenses, or don't have to go after those licenses, right? The same thing happened in 2013 with Silk Road, right? Ross Ulbricht and Silk Road. When it was sad, but like as soon as that ruling happened against Silk Road, then it became clear that Bitcoin was to be regulated by FinCEN as money, because Ross was charged for money laundering, right, with Bitcoin and all that. So, and that's what allowed Coinbase and BitPay and the first wave of crypto companies at the time to actually go out and get those MSBs and MTLs. Huh? What just happened? Oh, sorry. Let me see what's going on here. Technical difficulties. Oh, here we are. Yeah, so like what happened in 2013 with Silk Road was sad, but at the same time, it provided regulatory certainty for industry players to go and get those MSBs and MTLs in order for our industry to come to where it is today. So even if the SEC cracks down on us, I say it doesn't really matter. If you have to really get regulated, then so be it, and teams will deploy resources, right? Yeah, so going over kind of what we chatted about from the tech side of things, we have qualified custodians, right, that has custody of funds. It's not Web3, it's pretty much Web2, even though it's a CeFi DeFi bridge onto Web3. Right? There's payment rails for that fiat on and off ramp, and then there's the compliance aspect with KYC or KYB, right? Know your customer or know your business, right? You can think of that even as like retail banking or corporate banking in a way. And then some sort of liquidity, right? Where like prime brokerage, or, connecting to OTC desks or other centralized exchanges, or, as we're moving toward decentralized exchanges, that's liquidity, obviously. Yeah, and then, all of that kind of becomes APIs, right? For different teams to use, like Novi, like Venmo, like Pax, or like PayPal. Yeah, so then, if we think about, onboarding to Robinhood or onboarding with Coinbase, like, what's really the difference there, right? Like, they're all regulated pretty much the same, and they all have the same onboarding flow. So there seems to be a lot of overlap between, fintech and crypto, right? So, just taking a step back and think about what a neobank even is, right? A neobank is basically just a bank, right? Underneath a neobank is a sponsor bank. And the sponsor bank is actually the bank that is providing all the different omnibus accounts with the virtual bank accounts that allows a user to have, this virtual bank account with the neobank. So you can even think of that as like a master seed wallet, right? So a master account, sub account, right? Master wallet, HD wallets with different wallets underneath it. But of course, we understand the fundamental difference that they're not actually directly interacting with Web3. They are using, the centralized API to, do things like trade or, advise, robo-advisory or retire, applying for, So it's not just banking; it's also TradFi, right? In terms of investments and stocks. So all of that with an API, with core banking API that gives you those virtual bank accounts that allows you to transfer between them, right? That has bank grade security. We have to give them that. It's a closed loop system, but doesn't mean that's not secure. Until it's breached and the data is compromised, it's pretty secure, right? I mean, banks they do understand encryption, right? I mean, Visa, not many people know, all they do is key management. So with that kind of fintech Web2 stack, you're able to build all of these different neobanks, and the overlap does have to do with identity, compliance, right? Payment rails, some sort of virtual accounts, and the ability to transfer between them, right? Going from cash app to or cash tag to cash tag. So then, the only thing missing from that Web2 stack is this crypto layer, right? Literally everything else is the same as what we just talked about in terms of Paxos or Wire or Circle, except for this digital wallet layer that isn't there. That's where fintech currently is, right? They have fintech and Web2 and all these other stuff, but they don't have the digital wallets just yet. Is my connection bad or? Hopefully not. Okay, sweet. All right, so we're definitely down the rabbit hole. We talked about all of these different things, and where fintech and crypto are converging, right? I'd like to dig even deeper, right? Because rather than talking about all these different companies and how they work with each other through centralized APIs, what's really underneath the hood of even a bank, right? Well, underneath the bank are these traditional payment networks, such as Visa. This is a very simple example of what Visa does in terms of allowing a merchant to, be able to accept payments through an acquiring bank, and allowing a retail user to, be a card holder as issued by an issuing bank. And then stitching those banks together is the Visa network that allows money to move between the merchant and the user. And it doesn't have to be B2C or P2P, right? It could be a lot of different things. If you replace the left here with P and the right here with P, or or the left here with a B2B, right? Like the permutation doesn't matter. The point is Visa is connected to a bunch of banks around the world, and they allow money to move from A to B. That doesn't sound too different from blockchain. Of course, we know that their architecture is not blockchain, but it has strong overlaps in that it is a network that is secured through key management and encryption. Oops. And that's just one type of network is Visa, right? You have other networks for other things. DTCC, right? All of your trades on Robinhood are basically cleared by this one company that works with a consortium of trading firms, right? This is the CEO saying, DTCC is committed to ensuring the safety and stability of the global financial markets by seamlessly clearing and settling transactions every day. We've done this by maintaining an intense focus on delivering innovative solutions and technology, superior risk management, blah, blah, blah. And for post-trade environment for the future. So, that doesn't really sound all that different than a blockchain if you, point blank heard what he was saying, right? The Ethereum itself settles trillions of dollars, right? I mean, DEX has settled a lot of funds and trades a lot. So, the purpose, this is literally what TradFi is, right? TradFi is a series of, broker dealers and transfer agents, right, working with other brokerages. Perhaps they put them into some kind of API layer so that's easier, like Drive Wealth that allows you to turn on Cash App stocks, right? And then underneath it all is this other network called the Depository Trust and Clearing Company to do all the settlements and clearance. Whoops, I gotta stop doing that. Okay, another one is ACH, right? ACH has a centralized settlements mechanism through the Federal Reserve that clears funds from user A to user B through Bank A and Bank B. This only happens in the US. The equivalent versions are like faster payments in the UK or SEPA in Europe or Chats in Hong Kong or Interac in Canada, right? And or whatever equivalent intra country bank clearance systems that they have set up for that country. And there's differences here, right? I mean, ACH is probably one of the worst payment networks in the world. If you use, like China Merchant Bank to transfer to China Construction Bank, it'll take less than a minute, right? The same setup, with their central bank there, the People's Bank of China. Here in the U.S., I think by 2025, we'll get real-time settlement schemes. There's only a few banks in the U.S. right now that has real-time settlement schemes. Tier 1 banks. All the other credit unions and stuff do not have that. That's why there's T+2, T+3. But yeah, I mean, it's a network, And there's also other kind of closed loop networks like, Silvergate Exchange Network or Signet, right? They basically created their own sidechain. This is how I look at it, right? And this has been a great benefit to our industry, obviously. We understand this from a trading perspective as far as, all these centralized exchanges or OTC desks or every other counterparty that has been onboarded onto Silvergate, and they allow instant transfers and clearance on their own intra-network. This provides a lot of great efficiency for arbitrage or cross-country arbitrage. Let me see here. And then, from the top down, especially in Europe, you have the open banking APIs, right? Which is an initiative by the government that basically says, hey, you banks, you hoard data from your users. The data belongs to the user. If the user wants to share the data with another service provider, you need to make it easy for them to share it, right? And so the government forced the banks to open up their APIs so that other third-party service providers can also, so that you as a user can share your data from the bank very easily with third-party service providers. In the US, we don't have this from the top down. We don't have this at a consortium level between banks, right? There's no mandate from the government that says you have to share, allow the user to share their own data with whoever they want. What we do have is this top-down, capitalism, right? I mean, Plaid has basically done that, right? What Plaid has is basically the open API done through free enterprise. They have a super screen scraper technology that allows you to connect to different banks and then share your data from the bank with other service providers, such as Wire. This is taken from Plaid's API docs, where you can connect to Plaid and connect to a Wire using what is called a processor token. And where Wire is the payment processor and Plaid is the kind of data layer. And you can turn on the crypto brokerage, the centralized or custodial crypto brokerage we've been talking about. And yeah, there's so many other things happening, like traditional payment companies buying up crypto companies. And then here's one where I think a Canadian listed payment company called Novi acquired Simplex, which was a crypto payment solution, right? So you have all this convergence, at a network level in the industry. So where the heck are we, right? What am I talking about? We are witnessing FI's transition from Web2 to Web3 right before our eyes, right? We understand the traditional money stack, money FX. I didn't even talk about FX, shout out to dfx.finance. I mean, I think they're coming. But all of these different things we talked about, like there is some sort of equivalent version on the decentralized side of it, right? And right now we're in this transition, so you have to kind of you have to use the centralized setups during this time. But one day we will not have to use that CeFi DeFi bridge, right? As the world is converging onto Web3 from so many different angles, right? Oh wait, my one slide is gone. I was going to show you the W3C, with Worldwide Web Consortium and what they're doing with DID and signing with Ethereum. But point being that, like we're literally moving, blazing fast toward a direction where we won't need to have a Paxos or a Wire in like 5 years, right? So, because the banks themselves are starting to integrate natively with a pure play Web3 stack. Here at ConsenSys, we work hard to make sure that maximally decentralized Web3 wins, right? Through a series of developer tools, white label products for those banks to get blockchainified and launch on mainnet, not just enterprise blockchain stuff. And if you would like to learn any more about Metamask Institutional, please feel free to find me. This is what I've been doing all day. And Metamask too, obviously being a pure Web3 non-custodial wallet that allows access to DeFi, secure access to DeFi. The orange fox is retail. The blue fox is institutional. The blue fox can do everything that the orange fox can do, but along with some institutional guardrails, such as better reporting, DeFi native compliance, transaction monitoring, and other tools. So yeah, find me if you're a crypto fund. Thank you.